Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. I said at the end of my commentary last week that there was, and I quote, "There is a great deal of turbulence between the neckline below and the old upper tie above right now." I was referring to the neckline of the old 2020 to date reverse head and shoulders pattern that was below, currently at 148.15, and the upper tie of the October 2019 to February 2020 bullish shift pitch, or currently at 163.70. This carried on until the fourth countering level, if you would believe it, and was a sign of the strong indecision that the market had with what it was about to do. I suspected a possible move up to the upper tie, currently 171.55, of the recent November 2020 to April 2021 bullish Andrews pitch, with a possible action not dissimilar to one we saw back in late May and early June that ended up with an ascending triangle. Now, last Monday's action was not helpful, and bearish opening Black Mariposa was not what was needed. However, last Tuesday was more than adequate reason, or more than adequate response I should say, and saw prices well over the upper tie of the bullish shift pitchfork and on their way to the upper tie of the bullish Andrews pitchfork. However, I have to say in hindsight, such a fantastic move higher as we saw last week was possible, especially to the actual target for the reverse head and shoulders pattern in the 175.20 area. I've not bothered to place a target X as it has already been achieved, but the height of last Wednesday's move was hugely surprising, as was its gap higher. This was matched by last Thursday's gapping higher move, closing over the 2015 high at 187.40, and then last Friday with a huge gap higher over the November 2014 high at 201.30 with a higher peak, but also with an attempted bearish dark cloud cover pattern as well. Even this pales in comparison with today's open. Just over the November 2014 high, an acceleration yet higher, still higher further. Overhead, we now have the banded resistances at 221.30, 225.20 and 228.40, and running up to the October 2014 high at 229.10. These will be the next topside obstacles to overcome if the market wishes to try higher. Given that we've had two gaps on the way up, we therefore ought to be due a third exhaustion gap, though this is not always possible. But it would be a suitable reminder that perhaps the move up has overstretched itself. Meanwhile, the very recent 50% Fibonacci line at 182.75 amidst the last gap would be a useful guide for a pullback. The only issue with that is as prices rise, so does the value of that by a factor of a half. London coffee futures. Okay, I feel I should once more step back and show the big picture here. We had two sideways triangles in this market, one from summer 2020 and another more recently since mid-March. The earlier one had a false break higher, new one, closer one, did not. Since then, prices have reached all their targets on the top side for both triangles. There was some follow-on higher. Prices reached up and initially failed at the big 50% Fibonacci line of the February 2017 to April 2018 move at 1694. In some style actually, a huge key reversal down, closing below the middle tie, currently 1851 of the early April to mid-May bullish Andrews pitchfork. This pitchfork has been crucial in setting the timing for the moves higher. Prices next tested down to the lower tie, currently 1775, breached it and even closed below, but only the once. There was no second confirmation close below. This seems to have galvanized the market from its reverie, and prices shot up with an immediate countering bullish double, and have, overall, rallied ever since. Initially this was between the lower tie and the middle tie of the same April to mid-May bullish Andrews pitchfork. All this prior toing and froing over June had created a bull flag pattern, and this seems to have been the most recent driver for the moves higher. Initial target X in the 1700 area topside for this pattern was already achieved before I went away on my annual leave. A full target X1 for this pattern is in the 1830 area, off the top of my daily chart last week, but not so this week. Finally, there was an interim target for this pattern in the 1775 area, and designated target X2. I'd left it on my daily chart from before my annual leave. Now, target X2 was achieved the week before last on what was already an interesting action. It became more interesting last week when the Monday had an immediate countering combined bearish opening black Mariposa and bearish engulfing pattern right then at the top of the market at the time. As I said last week about this move, and I quote, "That wouldn't concern me greatly as the bullish incentive is still with the bullish Andrews pitchfork. However, caution always." And it was pleasing to see an immediate counter to the counter bullish Harami on Tuesday and the highest close for the market prior to that last Wednesday. Then came last Thursday with a gapping higher bullish opening long white Mariposa. This was still okay. It was within the bullish Andrews pitchfork, closing over the 2018 high at 1845 and the middle time as well. Then came last Friday with another bullish move. It seems, but it had issues. First off, it did break up and out of the upper tine of the Andrews pitchfork, currently 1928. But two things happened that were not supportive of this move. Firstly, we halted with an overhead congestion zone between 1968 and 2004. That includes the October 2017 high at 1999. Secondly, and perhaps most importantly, the whole action Friday was a long-legged, indecisive, spinning top pattern that closed back within the bullish Andrews pitchfork. Not the sort of thing you would like to see in a bullish action. Now today we've opened higher, over the upper tine. And though prices have also closed over the upper tine, they have not managed to close within or above the congestion 1968 to 2004. Yes, this market is still bullish. But why are questions such as this being asked when it should be more overtly moving higher? Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.